All right, we are live, guys. Welcome to another edition of the Futures Midday Update. Today's date is June 18th, Tuesday, June 18th, 2019. And we've got a beautiful day here in Toronto, Ontario. So let's get started. Good morning, Danny. Let's get started here with this update. First things first, we're going to cover some of the drivers that came in throughout the U.S. session. I know George covered the overnight drivers from beautiful sunny beach in Bulgaria, and we've switched across the globe here and back to Toronto here for some coverage of the midday update. So let's take a quick look at some of the news events, some of the squawks that came out during the U.S. cash session. We'll see how those kind of affected the markets, and we will go from there. So first things first, U.S. session during the U.S. session, there was a couple key squawks that came out. Most notably, well, not most notably, one of the squawks was from Trump. I mean, both of them were from Trump, but the second one was a little bit more important than the first one. The first one came in from President Trump mentioning that Mario Draghi just announced more stimulus could come, which immediately dropped the euro against the dollar, making it unfairly easier for them to compete against the USA. They have been getting away with this for years, along with China and others. So again, not necessarily hinting at tariffs with the Eurozone, but this is the kind of talk that we saw before this U.S.-China trade war, and what we saw with U.S. and Mexico. So it wouldn't surprise me to see a couple squawks coming on the following weeks with regards to the U.S. and Europe getting into some trade issues. However, the main squawk that kind of drove the market higher here, this one came out, I believe it came out around 9. What time was this? Probably around 9:40, before 10 a.m. I don't have the exact timestamp on it, but this is the one that drove the markets higher. And it was a tweet from President Trump mentioning that I had a very good telephone conversation with President Xi of China. We'll be having an extended meeting next week at the G20 in Japan. Our respective teams will begin talks prior to our meeting. And then we had shortly thereafter, we had Chinese state media confirming that President Xi held a call with President Trump, and they confirmed President Xi's plans to talk with Trump during the G20 meeting. Now, this is a little bit interesting because generally what we've been seeing as far as it relates to, the states mentioning that we've got meetings with President Xi out of China, the pattern recently has been, the states saying, yeah, we've got a meeting planned out with President Xi of China, and then China would come out and say, well, we haven't got any notice of this. This is, we haven't heard anything on our end about any such meeting. But this is the first time when we're kind of seeing both sides confirming the same story. So based on that, that's kind of why we saw that bit of a rally in the SPOOs this morning. Anything that has to do with smoothing over not the disputes, but the U.S.-China, the trade issues at the moment, anything that can kind of be seen as a good thing for the markets. This is what this was. So caught a bit of a bid on the back of that. I also see a squawk here from U.S. Trade Representative Lighthizer, who mentioned about constructive talks ongoing on the USMCA implementation. Hopes to submit implementing legislation that Congress can approve very soon. So that's what we're seeing here. And really, I'm not sure what the dollar's doing. Let me check what the dollar's doing at the moment. But we did see the US dollar also caught a bit of a bounce last week. We were mentioning that in our FX newsletter, the fact that we were around the 200-day moving average and that we really needed to see the bulls kind of step in and hold that level of support. That's what we saw. And it looks like the dollar is catching a bit of a bid as well today. And that's kind of weighing on the spoozies here. So let's just take a look. Dollar is up on the session, just coming off of its highs. It's around 97.66. Highs coming in 10 cents higher at 97.77. And so generally what I saw on the back of that Trump squawk with regards to the Eurozone is a bit of a dip on the dollar, but it looks to have recovered that since that squawk came out. So overall, for the remainder of the session, still looking bullish. I mean, both of our assets here, crude oil and S&P 500, are bullish on the day. And SPOOs are actually, they're currently trading at the 29.25 halves, which is about 20 points or so. Actually, a little bit more than that. 20 points or so from the previous all-time highs in the 47s. The current 2019 all-time highs are at the 61 quarters, I believe. So about 30 points away from those. And that's leading into the FOMC next week, or not next week, tomorrow. So we'll see how that affects the stocks. As we come into all-time highs on the back of this kind of potentially, historic event. Interesting to see what happens. I've got my own opinions on it, but we'll see if we can trade those opinions going forward. So that's it as far as news is concerned. Don't really see that much as far as actual economic information coming out. We did have the May housing starts. That came in at 1.27 million versus 1.239 expected. Building permits came in right around expected, 1.29 million versus 1.29 million expected. So that's all we had on that front. Let me just double check the calendars again, but it doesn't look like we have any really planned news releases coming into the remainder of today's session. As we go into tomorrow, a lot of traders will be focused, as mentioned, on that FOMC statement around 2 p.m. We also have crude oil inventories out at 10:30 a.m. tomorrow. So we're going to look to see good volatility on both of these markets going into tomorrow. As for the remainder of today's session, not too much as far as planned economic events. So just keep an ear out for any squawks that can drive this market. Anything around that nature. I did see some squawks come in that the White House was reportedly looking into legal ways to demote Fed Chair Powell. And then about 5 minutes after that squawk came out, the White House came out and said that that was a story from about 6 months ago. We're not looking to do that actively. And we saw a bit of a sell-off on these SPOOs on the back of that. So a little bit suspect, the timing of those, how that initial squawk came as we broke into fresh session highs. And then that secondary squawk came in as we came into, current session, intraday support level. So very, very suspect the timing of these markets, but I'll leave it at that. So let's switch on over to the charts here. Let's get on to Sierra. Let me share my screen here with you guys. There we go. And what you guys are seeing right now, if you draw your eyes towards our quote board here, top spot, we've got the S&P 500 traded around 1.52 million contracts on the session. Our previous day close, you can't really see it on the chart at the moment, but if I drag it up, there she is, 28.98. That was our previous day close. We're currently trading at 29.26, which is 1.04% change from that previous day close. So obviously you're seeing, just based on these figures, bullish sentiment in the markets today. And on crude oil as well, we've switched over to the Q contracts. Those are your August contracts. And you can see the August contracts today, we are up 3.58% from the previous day close. Your previous day close was at 52.17. Last traded price was 54.05. That gives us 3.6% up on the daily session so far today. As mentioned as well, good volume. Yesterday around this time, we only had around 250,000 contracts traded. Today, we have double that. So you guys are seeing a lot more liquidity is in the crude market. And when you see more liquidity, that's generally when you have those trending days. So good stuff on that front. SPOOs as well, 1.52 million contracts, just about a little bit higher than average. And again, as mentioned, both of these assets are on positive daily change percentages, which gives us a bullish sentiment. Now that we've covered that, let's look at our pivot charts. And here you guys will see something that we haven't seen too often. We are actually kind of flirting with the R3 on the crude oil chart. Let's throw in the the R4 here. All right, and there she is. So crude well above the pivot, well above R1, well above R2, above R3. We came into R4, kind of pressing off of that, and now we are trading back into R3. So generally, R3 to R4 on a single session is considered overbought. Similarly, if you see S3, S4 in a single session, that's considered oversold. So this market, you can say that it's considered a bit overbought at this moment in time. We are seeing a bit of a pullback here from the R4. Next key level is right around here, your 54. This is around your R3. This level's got to hold as support if we are going to continue pressing up higher. However, I think this rally has been quite aggressive. Not that many consolidations when looking at the tick chart. So I think we might be in for, a little bit of a deeper spill, maybe down into the R2 around those 52 or 53.60s for the remainder of today's session. If not, if we hold those R3s, then I would expect us to kind of hover around in this range going into the API release tonight and into the EIA report tomorrow morning. So that's what we're watching for on crude on the pivot chart. Obviously, we're above pivot, so we are bullish on the session. Just the fact that we are into the R4, we've seen some resistance up there, so I'm expecting us to kind of consolidate. I'm pretty much neutral to slightly bearish on this session, just given the how quick this rally came in. It's almost parabolic on the single session chart. So we'll see what happens there, but expecting consolidation really between R4 and R2. Spoozies. These guys haven't seen this in quite a while. Actually, since last week, I think we came into S5 at some point of the week. And this week, we are on the opposite end of that spectrum. We've traded into R6 on today's session. Big rally. And again, this came on the back of that Trump announcement, or rather that Trump tweet that, we're looking pretty good with our chats with President Xi were good, and that we're looking for an extended meeting into that G20 report. So with that said, again, R3 to R4 is typically overextended. In this case, we've come into R5 and R6. So we've seen some resistance come in at R6, really nice big rally here. I'm pretty much in the same boat as what we saw on crude. I mean, we came into the R6. We are breaking under R5 at the moment. Take note, however, this is 12:15 and these are hourly bar charts. So even though this is below the R5 at the moment, we are only 15 minutes into the formation of this bar chart, or this bar right here. So still 45 minutes to go. But if we close back below the R5, R4 becomes your next support zone. And I'm just looking at R3 as a better target for the sellers, just because we actually had some consolidation here before that press higher. So anybody that didn't get filled on this way up, you can look for them to try to rejoin this uptrend if it comes back down to the R3. So that's what I'll be watching for on that front. As far as it comes to the actual 10-tick charts, you can see crude off the open here. Where is our open? 9 a.m. Kind of fluttered around the open, came into this zone here, kind of played around with it, ended up coming to the overnight lows down in here and pressed off of those lows back into that open. Once we got back into the open, back around the previous day high, upside kind of opened up into where we're currently sitting at. Didn't have that many zones of consolidation. You had that one, but for the majority on the run up, you had nice quick pullbacks showing that the bull trend is, the momentum is there. Now you had this consolidation led to that breakup. You had this kind of consolidation here, which led to a little bit of a sell-off. And now we are kind of seeing this thing drifting sideways. We did get back below this zone here. So at the moment, as long as we're sat below these 54 level, could look for extended downside to come in. Where would your first downside target be? 53.80s. Second potential target right around this consolidation zone around those 53.40s. Really, your last line in the sand is this VWAP. Right around the 53s right now. If this thing starts to, kind of trend back up, you've got your value area high here from the 5 days. That could also be a potential good support zone. So as long as we're below 54, you can look for the downside to expand, look for some presses down into these zones. If it comes back in there, then you could start looking to pick it up. But at the moment, I think we had a nice big rally. I think we need to get a bit of a pullback just to get some, shorts in there, rotate some, flush out some of the late longs. I got long up there, and then we could look to press back to the upside. So that's what we'll be watching for on CL. On S&P 500 futures, you can see Pretty big bullish rally on the session so far. Nice rally overnight. Started off the session right around these 29.14s. We're telling the team, look for a dip down into our zone. Had that dip. Had that dip, came back in, and we were seeing these wicks suggesting, potential upside breakout would come. And then Trump came on and tweeted. We saw this nice big rally coming out there, and we kind of got stuck in between these zones here. So we qualified a fade on this candle here for a rotation back down to the bottom of the structure. And then once we got paid on that front, and then we were looking to flip back to the long side because this structure was bullish. So that was our support. We saw it had held here once. Once it came back in, it had held here twice. On this third rotation back down, we're looking to qualify that. I personally didn't get filled. I was looking for a long at the 27. Didn't quite rotate back to fill me, but I think a couple people in the room caught that long and took it back to the upside here. At this point, we were looking for a bit of a fade, but market did not confirm that, so we stayed out of it. Now we're kind of coming back into that zone. We've retested that structure, and we've held that structure now as resistance, broke below structure lows. Now we are coming into the Globex view app. We've held the US Pit view app here. So we're kind of stuck between these two levels here. This is kind of going to be a line in the sand for the bulls. If we see a press back up, another rotation down, could look to qualify something for another move higher here for breakout rotation and continuation. So that's what I'd be looking for on the long side. However, at the moment, I'm seeing a shift in 10-tick structure. That was your high. That was your previous low. That is a equal low. This is a lower high. This is a potential lower low. Right, so now we're seeing market structure starting to shift to the bear side. So if we come up here, I want to see the bears defend this and give us a breakdown below this view app if we're going to continue lower. If we do not continue lower, we bounce back up, rotate in here. Sellers are unable to get this thing anywhere lower. Then we can look to pick this up here for another press up into this view app. Then a little move higher, rotation back down, hold some support. Then we can look to press back up into the current session highs. So that's what we got for the session today, guys. Let's switch over to the final bit of the day here. Let me just get my performance meter up, make sure everything's looking good. Just hide this. And here we are. So what you guys are seeing here is our TradePro Performance Index. Great day yesterday, 80% were green. On today's session, we had almost 70% were up on the session, 68.29% green, 53.6% green, 14.5 flat. The remaining 30, almost 32% were down on the session. Again, great number overall. Happy to see this, as today's session to start was a little bit choppy. But again, we kept the team on the right side, and great results for the team today. So really encouraged to see these results. Look to continue this going into the end of the week. And as we trade into July, about 2 more weeks in June ready to go. And, half the team is in Europe, half the team is here in Toronto. So looking to keep this train running for you guys as we go, like I said, into the remainder of the week. We do have FOMC tomorrow and EIA reports as well. So expect some volatility. Not really expecting too much volatility overnight as we lead into the FOMC statements. So we'll see how that goes. But as far as volatility in tomorrow's US cash session, expect there to be, pretty good amount, especially if the Fed does not remove the word patient. If they keep that word patient in their press conference, then I think the market's going to dump on that. However, if they start flipping and, flipping to a more accommodating stance, if they remove the word patience and start to kind of signal, at least not directly, because the Fed never gives you any direct hints. You've always got to read between the lines. But if you can read between the lines and it's looking like they're going to start introducing lower borrowing costs, then that's pretty much what the market's priced in. That's why we're kind of seeing this rally. So expect that to happen. If he removes the word patient, then that will open up the potential for a rate cut in July. And that's kind of what the market keeps the word patient in there. The market is expecting rate cuts in July. If he keeps the word patient, that's likely going to remove the possibility or the potential of those rate cuts coming in July, at which point the market's not really pricing that in. So that's where the repricing is likely going to come in. That's where we're expecting a bit of a dump. But if he plays along and, you know, signals the potential for those rate cuts, that's pretty much what's priced in at the moment. On top of that, we also have the EIA reports for crude oil tomorrow. So we'll keep a close eye on the API reports that come out this evening, see what that's looking like, whether we've got a build or we've got a draw. And then that will kind of lead us into tomorrow morning for the actual EIA reports. So that's all I've got for you guys today. If you will be trading into remainder of the session, you know the 3 rules: remain patient, remain disciplined, and remain diligent. It's going to be all from me today, guys. Signing off here. Until tomorrow, good luck and good trading. Take care.